Hey, it's Mark Ferguson with Invest for More. I'm back with another real estate video, and today we're talking about investing in real estate when prices are high. So across much of the country, prices have been going up, as many of you know. Prices for goods and groceries and everything is going up as well. Now, a lot of people still want to be real estate investors. They want to invest in real estate, buy rentals or flip houses, but the higher prices are, the more difficult it gets. And me, being an investor now for 20 some years, which seems crazy, even for me, who's been in this game for a very long time, it's much more difficult to invest when prices are high. I'm still doing it. I'm still flipping houses. I'm still buying rentals in Colorado, which is a very expensive market, but it definitely gets more difficult. But in this video, I'm going to talk about what I've done to continue to buy properties when prices are high, and what other people can do who might be starting out or more experienced in different facets of their life can do to buy when prices are high. So love the likes, love the comments, love the shares. Keep those coming. Love seeing new subscribers as well. And if you're new to my channel, I do show all of my properties. We've got a triplex we're remodeling right now. A few flips we're remodeling as well. I've got a liquor store business, some other cool stuff, and lots of interesting things happen on this channel, as many of my viewers will tell you if you are new. All right, so right here we're in the Fred, St. Louis Fed economic data. They call it Fred. Don't really know why, but that's okay. And it shows median housing prices going back to 1960. We don't need to go back that far, but you can see these are the prices which were leveled off, took a big drop. The crash doesn't even look that crazy when you look at this. But then you can see we've had up, up, up. And then since COVID hit, prices have gone absolutely crazy. And despite what you hear in the news or might think from what headlines will tell you, most of this is owner-occupants buying. There have been 10 million more owner-occupant purchases since 2016, and only 1 million more rental unit purchases since 2016. So yes, investors are buying, but they're also selling a lot more. Investors have actually been selling more than buying since COVID started. So most of this run-up is demand from owner-occupants wanting to get into houses. And we've seen the owner-occupant rate increase as well from 63% in 2016 to almost 66% now as well. So we have this huge run-up in prices, and a lot of people can't invest in a house because if you buy a property the typical way and you're paying $400,000 for a rental property and you need to put 20% down, that's $80,000 you need just for the down payment. Then you've got closing costs, which might add another 3%, another $12,000. The bank will want to see reserves in your accounts on top of that. It can get very expensive. If you're buying properties that need repairs like I do all the time, you'll need that repair money on top of that. And for someone just starting out wanting to invest in real estate, it almost becomes impossible when you see these numbers, and can be very frustrating and be like, what the heck do I do? And so I know I talk a lot about investing in real estate, my properties and flips and commercial properties, but I know a lot of you out there want to get started, and it's very frustrating for you because prices are so high. And a lot of my videos talk about why prices are high. Maybe you think I'm justifying prices are high, or I'm trying to push prices higher. I try to look at reality and what's happening and what's really pushing the market. I'll be good either way if they're up or down, because we have cash flow and different things. And I got some of my best deals in the last crash. I sold thousands, maybe not thousands, close to 1,000 foreclosures in the last crash as an agent as well. I made more money income-wise than I ever did, I think, in that crash. But I still want to look at reality and what is actually happening with prices, not what I hope happens with prices. And I don't think we're going to see a huge crash. I don't think we're going to see prices drop very much. And you can see they flattened out here, but they have not really gone down nationally, even with higher interest rates. And eventually, I'm 95% sure rates are going to start going down. It might take 6 months, might take a year, but they'll start going down. And when that happens, prices might go even higher. And again, I'm not trying to push prices higher. I'm just telling you what I think is going to happen based on reality. I know a lot of other people out there are trying to say what they want to happen, but what you want and what reality is might be two different things. So what do we do when prices are high like this? Well, first off, what did I do? A lot of my properties I've bought, I still try to get good deals, and I have bought cheap properties, even though my median price is close to this in Colorado, not quite this high. around 420 in Greeley, I think it is in that range, 400 to 430. I still buy properties for $200,000, sometimes even less, and those deals are out there. There are still properties out there that are cheaper, even though you see most properties selling for $400,000 or maybe even $500,000 in your market. There are cheaper properties. It takes patience. It takes a lot of work, a lot of patience, and the ability to act very, very fast. So the first thing is, don't get so discouraged that you don't even try and don't look. There are deals out there. You can find them. They might be more expensive than they were 10 years ago, but they're still deals. And if you're buying a $200,000 property, sure, a lot more affordable than the $400,000 one. Sure, it might need some work, some rehab, but there's ways to get around that too. So the first step is don't give up, keep trying, and especially if you want to invest in your own area. Secondly, something I did is I stopped using banks for my financing. I stopped putting 20%, 25% down on properties. I've used hard money, and now I primarily use private money. That's money from friends, family, other investors I know. I can buy a property and actually get money back at closing because some of those investors will finance repairs 100% of the purchase price. Now it takes time to get to the point where you can build that trust, that relationship. They know what you're doing, but that is entirely possible for anyone. If you're willing to put in the work, do some deals, show people you know what you're doing. So that's something else to do, is to look for different ways to finance properties. Seller financing might be an option. Private money, hard money. They have much lower down payments. You can finance some of the repairs. That's the way to get into rental properties, get into investments, get into flipping without having to put quite so much money down. Now, you still want to make sure you get a great deal. All the numbers work. You're figuring all that out. Don't just jump into this without knowing what you're doing. But that's part of getting that financing too, is showing people you know what you're doing. Hard money lenders will look at that, will look at the appraisals, the values, the repairs, all of that. They won't lend to you if they think it's a bad deal. Private money may be a little different. Make sure you're doing your due diligence there to make sure you are putting in all the work and getting a good deal. So there's different types of financing to decrease that down payment. And not ideal, you can move. I know this is very hard work, a ton of work, not easy for a lot of people. But it is an option for some people, and that's something to seriously consider. If you really want to get ahead in life, real estate has done that for me. It's an amazing opportunity. Sometimes moving will make it much easier, especially if you live in somewhere like California, the Northwest, New York City, where prices are just crazy expensive. Moving to a lower priced area can make things a lot more affordable, can allow you to start investing in real estate. And being local, being there, makes it so much easier than doing it from a long distance, which is an option too. But moving is an option. I know it's an ideal, but I know a lot of people who've moved out of Colorado recently to different states. I know a lot of people who've moved out of California to different states. People are moving all the time. So while it's not easy, it's not, the best scenario, sometimes it might be worth it. So that's something to consider, is moving from very high priced areas to lower priced areas. Heck, I've even considered doing it, not seriously, but it's in the back of my mind, especially with the crime in Colorado and different things going on around here. I can't say I haven't thought about it. Now, I haven't started the process or made any decisions at all, but I've thought about it too. And then we have investing in different markets from where you live. Lots of people invest out of state. Not easy either. I have videos, I have articles that go over this, how exactly to do it. The best way to do it is really to find a really good agent, find a really good property manager, maybe find a contractor, but agents, property managers can help you do that, and have a third-party person there, not related to that property manager or agent, who can double-check on everything, make sure that what they say is actually happening, because it's really easy to get taken advantage of investing in a long-distance property when you're not there to see what's going on, and you're trusting people who you might not know very well. So that's an option as well. And there are turnkey properties that are an option as well too, where another company will buy properties, rehab them, sometimes rent them, and sell them to you. Now, those are often sold at a premium, right? You're not always getting a good deal, which I always want to get a good deal. So that's the downside. There's the option of actually investing where someone else is doing most of the work. Now, if someone else is doing most of the work, that means probably less profit for you, but it is an option. I do have a company who I send people to if they're interested in some turnkey stuff out of state investing. And sometimes they do have good deals too, where you can buy them before they're fixed up. And that is probably what I would do if I were to invest out of state and not kind of do it all myself. but use the company as use this company. I have bought a turnkey property in the past. I've talked about that, how it's not the greatest experience in the world, and I'm still dealing with some of the fallout. I'll link to that video below as well. But this is not that company. That company who I bought my property from no longer exists anymore. And I bought that with a lot of trust because I knew the person who actually sold it to me. And that was a mistake. No matter who you know, how well you know them, always have a third party check out things, check out the area, check out lots of different stuff. I've had a few people tell me the property I bought was pretty much the worst place I could have bought it. And then if it was anywhere else, pretty much in the state of Ohio, they'd buy it or help me sell it. But because it's there, they won't. So that's kind of some of the issues and why you want to make sure you have a third party on the ground checking things out and helping you out. So if you are interested in that other company, talking to them, I'll have a link below to an article on turnkey rentals that talks about the pros and cons, things to watch out for. And it's got a link on there you can sign up for or click on and get sent to that company. So as always, I do get a small referral fee if people sign up. So I always disclose if I make any money from anything I tell people on. You might have never have heard me say that before because very rarely do I ever promote things that I make money on. So this is one of those few things. There's a few other things like a real estate school that I haven't talked about for a long time. SoFi Bank, which has been pretty cool. So there's a few things like that, but very rarely do I promote things. And if I do, I've always checked them out myself, checked them very thoroughly, or use them personally. So that is one that you might consider doing if you're really trying to invest, are stuck, can't get through it. So again, don't be afraid to look for deals in your own area. Be patient. Even if prices are high, sometimes those deals pop up. Look for alternative ways to finance those properties. Maybe have less down payment, less repair costs. That's a way to get started sooner. I forgot one. I'll add here in a second. Investing out of state. Moving is another option. Turnkey properties. And then, of course, one of the easiest ways is buying a house as an owner-occupant. Either house hacking, buying there and living in it. Low down payment loans, 3%, 3.5% down. There's down payment assistance programs. All kinds of ways to buy a house as an owner-occupant. Put less money down. Live there usually a year. You can move out, rent it. If you buy a multifamily property, you can usually buy up to a 4-unit property. Live in one unit. You can rent out the other units. Again, not ideal, not perfect for people with families maybe, or some people. But if you really want to get ahead, you really want to, make a big change, sometimes it takes those sacrifices and big changes in your life. So those are some options to invest in today's market when prices are high and it's very tough for you out there. So don't give up hope. There are ways to do it. And just because prices are high doesn't mean you have to hope for a crash and hope for them to come down. You can take action. You can go out there, do some things, make some moves, and not have to wait for something else to happen, but do it yourself. All right, thanks for watching. Hope you guys enjoyed the video. Be back here soon with many more other videos. Take care.